The Jon Sanchez Show on Newstalk 780 KKOH. Again, a 60-point gain on the Dow. NASDAQ rose 27. S&P higher by 3. All right, let's go national. Talk a little mortgage activity with our good friend Mike Dubeck, Planet Financial Group President and CEO. Mike, it's a pleasure to have you on the program. How are you tonight?
Good, John. How are you?
Doing well, thank you. We're just trying to stay warm and dry here in Nevada.
You bet.
Oh, my goodness. Mike, you have a fascinating background. You're a former Wall Street guy like myself, and I want to really start off, if you can talk a little bit about yourself and what Planet Financial Group does, and then I want to get into your many years of experience and obviously move into the details as to what you see going on in the world of lending and so on and so forth.
Yeah, sure. So I kind of grew up on Wall Street in the early days of the mortgage market. Started at the First Boston Corporation in the mid-'80s, which was kind of right at the beginning of the S&L crisis. We didn't have, as an engineer out of college, we didn't have Microsoft spreadsheets at the time and whatnot, and easy to move data around. And my job was taking these big tapes of mortgage portfolios with a programming background and sitting on a trading desk live in New York City and creating reports that the traders could use to buy these portfolios. About the same time, the woman across the desk from me was working with a company called Fannie Mae on creating their initial selling guide. And, we were all right there. So just kind of grew up with the industry and ended up being co-head of the mortgage business at a major Wall Street firm. And up through the credit crisis. And then since then, just kind of been more entrepreneurial and had the opportunity to come to Planet in 2013 and, really build it into the lender and originator that it is today.
Wonderful.
So,
Mike, take me back because the audience is very fascinated about this topic. We discuss it a lot on this program. Take me back to what it was like being in the world of mortgages on Wall Street during the financial crisis, 08, 09, and that whole debacle that the country went through. What was that like?
It was not fun, John.
Yeah. To put it bluntly, right, Mike? To put it bluntly.
It was enormously stressful. I mean, things... it's funny. I'm actually in Las Vegas right now at the asset-backed securitization conference, and it was about 2007 in February when I think the investors and the bonds and everyone around realized that things had changed and the bonds weren't performing, delinquencies were quite high, and everybody, I think the question at the time was, was this like a short-term thing and,
right.
Some bad inventory was going to make it through and things would blow over, or, was it something much worse? And, there were a lot of things called derivative instruments, CDOs and whatnot, that really, if there were 1 million mortgages out there, to make it simple, it made it seem as if there were 5 million of them. So it really compounded the problem. And, we saw how it all played out, unfortunately. Took longer, than I thought it would. Really, the world didn't really see it until 08, but I think those of us, on the street and in the industry really kind of saw writing on the wall in 07.
Absolutely. Mike, do you think with your years of lending experience, do you think we could ever see a similar type of crisis? Because myself being on the equity side, we watch, of course, the mortgages and defaults and delinquencies and all the real estate data every day, of course. But someone with your years of experience, do you think we could ever find ourselves in that type of scenario again, or would it be another black swan type of mortgage event?
I mean, anything's possible, right? The events that went on there were, the rating agencies really opened the door to what could be securitized. And, if it couldn't be securitized, the institutional money would not have been there to buy it, and the guidelines wouldn't have become what they were. But, things are very different today. Back then, all a borrower had to do was state his income with no support for it, state what his assets were, state what his job was, and there's very little verification. So, things are night and day in the mortgage business now. They're a little more cumbersome, but you have your full income check, you have your employment check, you have your asset check, and it's just made a world of difference. Probably the best performance we've seen in mortgage inventory since then. And, the mortgage market's in good shape. And like I say, what really compounded the problem were these derivatives, which, they pop up in different forms from time to time in the levered loan market, that type of thing. But I think the world really, doesn't want to see a repeat of that. And, as long as we can keep discipline and whatnot, I think, odds are low. They're not zero ever, but, much lower.
Let's hope and pray, Mike. Let's hope and pray. We're going to take this bottom of the hour break, Mike. When we come back, I want to talk about some of the specialties of Planet Financial Group, some of the different types of loans that you guys do, et cetera. So our very special guest tonight, Mike Dubeck, Planet Financial Group President and CEO. Start over to Mr. Jim Fannin. He's got news, traffic, and weather. How you doing, Jimmy?
Up to the minute money news with Jon Sanchez every 30 minutes on Reno's Morning News. Weekdays on News Talk 780 KOH.
Welcome back to the Jon Sanchez Show on News Talk 780 KOH. 60-point gain on the Dow today. NASDAQ rose 27, S&P higher by 3. Again, the president yesterday, as well as today, announcing the postponement, I guess is the best word, of the tariffs against China that were expected to be implemented on March the 2nd officially. It was really March the 1st, but the official date was March the 2nd. It's where our tariffs were going to increase from 10% to 25%. It's been postponed now. We don't know how long. And the market got excited about it, but got a little frustrated not knowing what that date is. All right, our very special guest tonight, Mike Dubeck. He's the Planet Financial Group President and CEO. All right, Mike, I'm going to take you back just a few months ago, and I want you to explain something for me. Housing Wire. You were quoted stating the following. I think this is a very fascinating quote. Understanding that there will always be good markets and bad markets. To succeed, you need to take advantage of the opportunities market transitions create. That was a direct quote from you, my friend. Tell me about this quote and what you mean, because this is really your management style at Planet Financial Group, taking advantage of all different cycles of the market, correct?
That's correct. Yeah, so we, just to get on that, one thing you can always count on in our business is change. Rates go up, rates go down. We have a very cyclical business throughout the year where volumes can really slow down, in the winter months and, the prime months or the prime, sort of home buying seasons. And, let me tell you a little bit about the company, and then
Sure.
I think I can bring that to light. Planet is a non-bank originator and servicer of residential mortgage loans. So what is a non-bank? Well, that's a term that evolved post-credit crisis for companies funded by private capital. The banks had a huge role in the mortgage industry prior to the crisis, and now non-banks are probably about 50% of the market. Non-banks, we don't take deposits, we don't offer checking, auto, student loans. We're specialists in mortgage lending and mortgage lending only. Non-banks are viewed as more flexible and nimble than banks, and much flatter structure that we can move with change in the industry quickly. We have a national presence. In addition to originating the loans, we also service the loans. What that means is we'll collect the loan payments, administer, anything that goes on with the borrower through the life of the loan. We do that in all 50 states. Those two business lines are a great offset to each other. So, talking about change, when rates are decreasing, your originations are doing well, your servicing does less well. When originations slow down, rates are going up, your servicing asset is out there longer and it increases in value actually. We have corporate centers along the East Coast, in Dallas, California, and then we have 40 retail branches providing a local presence in the communities, including Las Vegas. I'll be there tomorrow, and I'm very proud to be here in Nevada. And, being a mortgage servicer, we retain the customer relationship, whereas those that aren't sell it off to others. Maybe they sell it off to big banks or whatever. And that's an important aspect of customer service to us. We have 85,000 servicing customers, and we originate $5 billion per year and growing. And, I just think is whatever the market brings, whatever, the finance climate brings, we're able to react very quickly, whether it's with a change in business lines, new products, added products, running specials. We have a very flat organization. You know, you can think of me as a quarterback on the field, and I can change the call. Looking at the defense as opposed
Call an
to
audible
working
if
in
you
a
need
bank.
to.
Yeah, not a bank where we have to have 40 meetings and make a decision in 4 months.
Yeah, exactly. Well, I think flexibility, of course, is the key in any business today because things are changing so rapidly, whether it's technology, regulatory forces, etc. You're absolutely right, Mike, and having that flexibility is the key to survival. Let me go into your brain a little bit as far as where you see this industry, because obviously you're very forethought oriented, the way that you manage and build companies. Where do you see let's leave the servicing side out for just a moment, but the origination side, where do you see the industry, say 5 to 10 years from now? Is it going to be what we know now, or is it going to be more automated underwriting and more, just fill out a quick app on the internet? Where do you see things?
Yeah, sure. I mean, technology has really caught up with the mortgage industry,
Yes.
and that's good for everybody. I mean, you see these digital mortgage processes, you see the ads for Rocket Mortgage on TV, and at this point, just about all the big lenders have their own version of Rocket Mortgage where a borrower can, access his statements online and all the paperwork that needs to come together, and it really just expedites the process for the borrower. So I think the technology that's sort of come into play really is a big win for the consumer. It's made the consumer experience better. It's made customer service better, that type of thing. In other respects, it really just matters. The mortgage market right now is probably 85-90%, government lending programs with Fannie, Freddie, and Ginnie. And, the question is, does any kind of non-agency market and securitization market develop again or not? And, there are signs, right? The investor loans out there are being securitized. We have, loans to single-family landlords that, rental programs, that kind of thing. We're seeing securitization there. So, there are signs of life, and diversity is good. So we do hope those products come back, and we hope they come back in a disciplined fashion, but with full verification of income. It's very important.
What's being that you are funded by private capital, unlike, like you said, a bank? How's the access to capital these days?
It's pretty good. It was pretty rough there for a while. I would say in the last 3 or 4 years, it's moved up. Although we are non-bank, we start with our equity capital, but we do get debt financing, and that can come from a bank. It can come from Wall Street firms. We do warehouse loans that we originate. Those are usually bank lenders providing short-term warehouse lines. So I would say it's healthier than it's been, and it's gotten steadily better, for the lender to run his business over the last 5 years. So good news there.
Yeah, absolutely. But again, your job as a CEO is to look for those time periods when things aren't quite so rosy. So as a CEO of a mortgage company, what happens if whatever the catalyst may be, Mike, again, pick your time period, where that capital begins to dry up? How do you survive as a mortgage company at that point?
Yeah, no, absolutely. Well, you try to build up your wallet, right? You try to build up your balance sheet in the good years and squirrel it away to carry you through the leaner years. And you just try to find, different ways that where the market's providing a need that we can fill to produce revenue. So, we have 6 major revenue lines. A new one that's come up is lending to fix and flip developers. We've been doing that for 3 years, and we really started increasing our volume. And that's not something that a traditional company like ours would typically do.
Right.
But just bolting on new business lines and like that, and it's cash positive, where some of our lines are profitable but operating cash negative. So you really try to balance that out. And liquidity management is everything, like you say.
Absolutely, it is. You also do some lending to an area that I participate in. That's the Real Estate Investment Trust, or REITs, hedge funds, et cetera. What's that marketplace like right now?
Pretty good. I mean, the REITs do well in a steep yield curve environment, and they've definitely been challenged on that. They kind of have longer, higher yielding assets with shorter term funds. I think the reason we haven't seen more problems with REITs is, historically they did that with, just agency mortgage bonds, which were more of an interest rate play. And a lot of them have really gotten more in this, what we call the credit side of the business. So some of these REITs buy those fix and flip loans that we originate. Some are getting into that single family sort of rental business, with all the loans that went delinquent during the credit crisis. A whole bunch came back to what's called reperforming, and they can securitize those and invest in those. The hedge funds have sort of a similar play, but I think, those are private companies where the REITs are public, so we get better visibility. And, the REITs will also invest in the mortgage servicing rights or components of the mortgage servicing rights. So, there's plenty for them to do, and, talk about reacting to change. I think they did that pretty well in anticipation of the flat yield curve environment.
Indeed. Speaking of the yield curve, we got 1 minute before we go to break, so if you can't finish your answer, we'll conclude it when we come back. Talk to me about your opinion of the Fed, the balance sheet, the unwinding thereof, the impact on not only the government bond yields, which ultimately impact mortgage rates. What's your view of the Fed at this point in their balance sheet?
Yeah, well, they definitely, they were on a pretty aggressive path there, and then I think they saw how the stock market reacted, and it's kind of a tug of war there, right? Because stocks go down, then people jump into bonds, and rates actually go down. So it's not getting them what they want out of the equation. So I think they realized they needed to take a more, rather than a straightforward path of we're going to raise rates 3 times, it was more of a watch and see and sort of react, and they did. They did the same thing with the balance sheet. The market seemed to be very focused on that balance sheet statement when they said they were going to not be, on a predicted path there, and reacted favorably. So I think we got as high as a 320 on the 10-year, I think, and now we're down almost below 270.
Yep.
And at the end of the day, we really. When that was at 320, that was a 5% mortgage rate for borrowers, and we really saw people sort of back off. That seemed to be kind of a magic number there.
Yep.
And but here we are, average mortgage rate at 465. I met with someone today who pointed out to me that over the last 18 years, the average mortgage rate has been 465. So
there you go.
We're right in the middle of the road here.
All right, perfect. All right, Mike, we'll continue our interview after this break. Our special guest, Mike Dubeck, Planet Financial Group President and CEO. Let's wrap it up with Monty Wolf from the Right Now Traffic Center.
Unfiltered and unafraid. The Savage Nation, weeknights at 9 on News Talk 780 KOH.
Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Our special guest tonight has been Michael Dubeck, Planet Financial Group President and CEO. Mike, real quick, hammer through about 3 questions here with a few moments remaining. Tell me what you're seeing as far as national default rates. We still okay, or are we starting to see any cracks in the eggshell at this point?
No, really good. Our portfolio's at an all-time low. We have all kinds of products to borrowers with lower credit scores, and all kinds of walks of life, and they're all doing quite well. So
excellent.
Yeah, knock on wood.
Yeah, exactly. Let's talk about those. You said you're down south from us in Vegas. Obviously, there's a lot of borrowers, not only in Vegas but in other areas, of course, that rely upon tip income and other income that's hard to substantiate from a lender's perspective. What kind of programs are available for people like that?
Yeah, so good news there. There's programs where you can qualify based on submitting your bank statements. You have to, aggregate about 12 to 24 months of them. And instead of looking at a W-2 or something like that, as long as you're depositing that tip income into the bank, and it's hopefully pretty consistent, you can qualify right off of that. Here in Nevada, you have some terrific state housing programs. There's some that are very specific to Clark County, some that are specific to the culinary industry, for example. And, they might have an income cap that you can't make more than a certain amount or something like that. But, that's why at Planet we have so many different products, and we're bringing them out every month because we cater to all walks of life, the first-time home buyer, the tip income borrower, et cetera. And when you walk in that door, if that product's doable, we want to make sure we have it available to you.
Awesome. What do you want our audience to know as far as interest rates for 2019? Let's go again into your years of experience real quickly. Any major predictions on your part?
I think the biggest event is you get an agreement with China, and you get you get a lot of ambiguity out of the market, and we could see things, potentially tick up again. But, there's always offsetting factors. I would bet we're going to stay in a range between, maybe a little lower of where we are now to maybe 3% or so. So on a mortgage, that's, 4.60 to 4 7/8. And again, over the last 18 years, that's pretty average. And over the last 30, 40 years, that's phenomenal, I would say.
Absolutely, it is. Terrific. Time. Indeed it is. More information can be found at planethomelending.com. Mike, it's been a great pleasure to have you on the program. Can't wait to have you on again, and keep up the hard work at Planet Financial Group. We sure appreciate having you.
You bet, John. Thanks for having me.
You betcha. Enjoy your trip in Vegas. We'll do it again tomorrow night on the Jon Sanchez Show. Take care.
On air, online, on demand. News Talk 780 KOH.